Advanced Micro Devices AMD stock is down 39%, and I think this is one growth stock you might regret not buying on this dip here. In this video, I'll explain why I think that's the case, so let's get started. So first, looking at AMD's revenue growth over the last decade, we see a nice steady upward climb in terms of revenue growth. The company has done a good job capturing market share that previously belonged to Intel and Nvidia. So it's making inroads on both market shares in terms of CPUs and GPUs. So it's making progress on those fronts, and these are likely to be growing industries in the long run, although in the near term, these industries are pressured, which can explain why the stock price is down significantly. And you can see revenue growth has fallen significantly for AMD. It's also fallen for Intel. It's fallen for Nvidia. The sector has been under pressure because during the earlier stages of the pandemic, people bought so many computers, people bought so many GPUs that now they are less willing to upgrade to newer devices because these are typically long lasting devices, whether it be a CPU or GPU. When you invest in one of these, it's several $100s, maybe even in the thousands of dollars, and you're going to use that for several years. You're not going to buy a new one. If you bought one in 2020, you bought one in 2021, you're probably not going to buy another one until maybe 2024 at the earliest, more likely 2025 or 2026. These devices last anywhere from 4 to 6 years on average. So for that reason, the company is pressured in the near term, and that's creating an opportunity for investors to jump in and buy this stock while it's down because it's overall an excellent company. Look at AMD's operating profit margin over the trailing 12 months here, going back the entire decade. AMD demonstrates what I love to see in companies, and that is when revenue grows, their operating profitability expands with it. And look at that operating profitability from negative 12% all the way up to positive 24, near positive 24% at the peak before declining back down to 5.3% as a result of the near term headwinds. I can reasonably expect the company's operating profit margin to recover back to near 20%, although not in this year, more likely not in 2024, but starting around 2025, 2026, its operating margins are likely to recover in this 20% range. And then look what the operating profit margins have done for the company's cash flow from operations. From being relatively flat, it exploded all the way up to $3.5 billion over the trailing 12 months. So it's been able to use its profitability to generate excellent cash flow from operations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason why I think AMD is one growth stock you might regret not buying on this dip is because of its relatively inexpensive valuation, is trading at a forward price to earnings ratio of 22.48. That's near the lowest it's been going back all the way to January of 2022, roughly 15 months of data on this metric, and this is close to the cheapest it's been. So if you don't capture this stock at this valuation, you may not get a chance to buy it at this value at next year when its prospects are looking better and better, right? So this might be the last opportunity investors have of buying AMD at this favorable valuation. Okay, so that's why I think you might regret not buying this stock right now. So thank you so much for watching. That's all I've got for this video. You've got some other videos that I've done that are popping up on your screen right now. So please click one of those and I'll see you over there.